and welcome to the Pandocap show. We are kicking off the second half of this year with Lise Beyer, founder and partner of Class 5 Group. Liz, welcome to the Pandocap show. If you wouldn't mind sharing your background with our audience.
Laura, I'm just delighted to be here, and I'm so excited for you, and there's so much that so many people can learn from listening to something like this. So thank you so much for inviting me to participate. So my background, for a long time, I was an institutional investor at one of the largest, in fact, the largest investor of technology only funds. We were, the fund was, I was at T. Rowe Price for a long time, and we invested in technology companies, and as a dedicated tech fund at that time, we were the biggest. I left there and after a bunch of years, and I moved out to California. T. Rowe is based in Baltimore, because Baltimore, to use these, since I presume everyone has maybe seen Hamilton recently, Silicon Valley seemed to be the room where it happened, and I wanted to be out there. So I moved out to California, and so I became a venture capitalist for a brief period of time and discovered that the VCs who I thought were really good at what they did were the ones who had actually worked for a company. It wasn't just about building models and telling other people how to run their business. The ones who really were helpful were the ones who'd been right there in the trenches. And so I decided if I wanted to be a good VC, I would have to get right down in the trenches. And so I looked around, because I'd been at that big mutual fund, T. Rowe. I knew a lot of people in tech, and I called a bunch of folks, and somebody who I knew had just landed at this search engine company thing, and it had this funny name and this funny multicolored logo, and I thought, well, that'll be interesting. I think maybe I'll try to go there. And so I called them up and I made a pitch as to why I thought I could be helpful to them if they would consider hiring me, and much to my surprise and delight, they agreed. And so I left the VC world and I went to join Google. Again, and it was at a time when none of us had any idea what it would turn out to be. And I spent a number of years at Google, in particular, helping them work through the IPO. Stayed at Google through the IPO, stayed at Google the year after, a number of years ago now, set up an advisory firm at the Class 5 Group to work with just a couple of management teams a year to walk them through all the nuances of the process, because it's first of all, management teams understand semiconductors or business software or ride sharing, or they understand their businesses, but they don't all really understand the nuances of the process. And secondarily, they need a completely trusted advisor who isn't serving any other interest, no limited partners, no buy-side investors, just someone to whom they can ask the questions that they don't want to ask anyone else. So anyway, long-winded answer, but I ended up a number of years ago setting up an IPO advisory firm.
Wow. Well, what a great story. Thank you for sharing that. And you've definitely been in the room where it happens. So how would you summarize the activity on the capital markets for the first half of 2020?
It's been crazy. It's been unpredictable. We started out the year fine, solidly left foot in front of right foot. And then, of course, COVID hit. And everyone was working from home, and the market went crazy. And not in a good way in March. And really, none of us knew what the next day was going to bring. And then things became a little more calm, and companies reported their earnings for the quarter that had ended in March, which had basically only been affected by COVID for a couple of weeks. And the numbers weren't so bad. And most companies then said, look, we don't know what's going on. We can't even give you a forecast for what's going to happen later in the year. And so, again, rolling into April, May, things were quite unsure, but the market was picking up. And then the market kept picking up. And then the market kept picking up again. And suddenly we're not we're not going the speed limit. We're not going 50 miles over the speed limit. We're going like rocket booster to the moon. And it's fascinating, because the economy is certainly not in great shape for all kinds of reasons, but clearly COVID and the number of people out of work is going to have an impact. And yet the market is acting like happy days are here again. And so why is that? Part of it, I think, is, to use Alan Greenspan's term from years ago, irrational exuberance. Part of it, it's because debt levels or bond interest rates are so low that there's really no place else to put your money if you want it to not only keep up with, but perhaps perform even better than rates of inflation. So where are you going to put it? You're not going to get anything back if you put it in a bond or in a bank account after you've got a certain comfort level. So I think money has flowed into the market there as well. I think also many companies have weathered the storm better than expected, and investors are, at least at this point, mid-July, willing to say, you know what, I know 2020 is unpredictable, so I'm just not going to pay attention. What do we think this business will look like in 2021 and 2022?
Liz, this month, we've seen more companies file to go public. What do you think is driving this activity to access the public markets during this volatile time?
I think there's two things going on. When you see a company file to go public, you know that company's been working on the process for the past 6 months, at least. So I guess sometimes there are companies that go quicker, but assume they've been working on it for at least 6 months. So it isn't like anyone flipped a switch and said, let's go. We're seeing a couple things. One, we're seeing companies that actually were hoping to go out in March, April, and May that put it on hold. And so we're playing catch up. We're also seeing a number of companies look at the strength of the market, look at how enthusiastic investors are, and saying, go while make hay while the sun shines. And so I think there are many companies actually whose business has not only been not hurt, but has been helped by working from home or people ordering more from home or whatever it is. Some businesses have absolutely been helped.
Can you share your perspective on non-traditional IPO approaches like direct listings or SPACs?
Well, the good news is that because of the couple of direct listings last year, that was Spotify, the two high profile ones were Spotify and Slack, investors and investment bankers are willing to consider different alternatives to the cut and dried normal, if you will, IPO. The traditional IPO, if managed correctly, is still probably the best answer for many companies. Direct listings are a special offshoot for companies that don't need to raise any money and for companies that frankly don't care who their shareholders turn out to be and don't want to have any say in the price of their offering. And there are certainly loud advocates for them, but anybody who looks at the market noticed that both Slack and Spotify had a really rough intro into the market as the stocks went public and went straight down. And generally speaking, companies are happier and employees of companies are happier if you go public and the stock goes up. So good news is people are considering alternatives. SPACs are a slightly different animal. SPACs have been around for a very long time. A SPAC is someone invents a company that has no business but raises money. And they raise money on the promise of, you give us money, trust us, we're going to buy something good. Investors tend to like SPACs to some degree because they can park their money and get paid an interest on it, but they don't have to make a decision about buying a business or not. Then when the SPAC, the people who raise the money, find a business they want, they will merge with it. And so the SPAC is a public company, the operating company is a private company, like Pac-Man of yore. The SPAC eats the private company, and voila, the private company is now a public company.
So Liz, what are you looking forward to the end of the year or early next year?
On a business front, I'm actually pretty excited that investors and companies are exploring alternative structures for ways to go public and maybe looking to solve some of the issues in the standard operating procedure. I'm pretty excited about that because, okay, I'm biased. I was on the Google IPO and that was a Dutch auction, and we've seen so little of that structure since then, but it worked really, really well. And I think there are companies that are considering that again, and I'm excited about that.
Thank you so much for coming on to the Pandocap show and sharing all your insight. We really enjoyed the conversation.
I did as well. Thank you again. And I'm so excited about the platform altogether and wish you enormous success.